Everyone gets analysis paralysis, but I've trained my mind of like, I'm a person who's going to go out and do it, figure it out on the way, right? And sometimes that's bit me in the butt and I lost money on it, but more often it's helped me take action, learn something, and then improve it the next time around.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into yet another episode of the Freedom Point. I'm so glad you're here with us again today. I've got another amazing guest, as I always do. I've got Zach Lemaster on the line. Zach, thanks for joining the show.
Yeah, Jeremy, thanks for having me on. I'm excited to be here.
Yeah, absolutely. Looking forward to chopping it up with you. So Zach is the founder and CEO of Rent to Retirement, the nation's leading turnkey investment company. Zach is a seasoned real estate investor, a licensed broker. He's accumulated a large portfolio of rental properties across multiple different markets, including single family, multifamily, commercial, and new construction. Zach is also a licensed optometrist who practices on a volunteer basis. Zach, you've got a lot going on. Okay. You got a lot of irons in the fire, as they like to say. So would love for you to maybe kind of unpack a little bit more for our listeners, maybe your journey, your background, backstory, what you're focused on today, et cetera.
Yeah, thanks so much. And again, Jeremy, I appreciate you having me on. When you go through the bio in a condensed version, it sounds like a lot, but that's over like a 15-year period of time. So, just to set the stage, I think real estate investing and entrepreneurship and all things, it's a lifelong journey, and there's multiple chapters in that, but I just always kept going, and so we're very excited to be where we're at today. But I have a background in healthcare. So my wife and I are both optometrists by education. We had nothing to do with real estate or the business we operate today. I don't want to say it happened by accident, but real estate investing started as a side hustle for us. So I was an optometrist. I was on an Air Force scholarship. So I joined the Air Force immediately after school. I practiced there as a captain for about 7 years. That's where I started investing. The first house I bought was a duplex, lived in half, rented out the other half, used a VA loan, which is fantastic because I got to put no money down, had no PMI. And that's where I got the real estate bug. And we started to invest in other properties even that same year. And this was about, again, 15 years ago. And there's never a year, Jeremy, that went by that we didn't buy real estate. I'm not saying we made money on all deals, but we just kept investing. And at some point, there was a pivotal moment where we started to invest. When I say we, it's just my wife and I at this point, but we started to invest out of state. Because we invested locally first, which is great, but we really quickly identified that, hey, maybe our local market isn't the best market or doesn't make the most sense to invest in long term. We wanted to diversify. So we started to invest out of state. And that went terribly wrong, and we lost a bunch of money. And but we didn't stop there. We said, hey, we can figure it out. We can have a better process to identify markets, to build teams around that. And that took many years to develop. But that was really the foundation of Rent to Retirement, which we operate today. We had a lot of friends and family and colleagues that were like, hey, we see the success you're having in real estate. Like, can we invest with you? And we just brought them along the journey, right? Doing the same thing that we did, which is identifying the best markets around the country based on our goals, and then building teams in those areas to support our portfolio so we could scale and diversify over time. And that allowed us to retire from our career paths as professionals. So we surpassed our income as doctors and continued to build this business. So yeah, it's that's about as consolidated of a version as I can give you.
I know, I appreciate that. And your story is really fascinating to me for one reason, and that is we both got started about the same time on our real estate journeys. Okay. My wife and I started about 15 years ago fixing and flipping homes because it looked super sexy on HGTV. We kind of built up this, portfolio of single family homes that were, local to us, right? Within 10, 15 miles of where we live. And really it was because we had an interest in real estate, but we're also looking for ways to diversify outside of Wall Street. my wife just happened to be, really stepped off the W-2, about that same time as well. So she had a little bit of extra time to kind of deal, with some of the interior decorations, right? Sourcing, properties, dealing with the tenants, trash, toilets, termites, that sort of thing. But I am kind of curious to know a little bit more about, you and your wife's journey back then, in terms of, how did you juggle, being a full-time optometrist while also building up and scaling up a real estate business all at the same time? Because for me, anyways, 2015 rolls around and I had to step off of the active, real estate bandwagon out of pure bandwidth issues, because at that time we doubled down on kids, went from 2 to 4, twins were number 3 and number 4, right? So it just got to that point in my own personal, life and experience that I just didn't have the time, or the bandwidth, quite frankly, to manage both at the same time. So can you kind of walk us through, that time 15 years ago when you guys are effectively riding 2 horses at the same time?
Yeah, and it's interesting because so many people, I think, are attracted to real estate, Jeremy, because they want to buy back their time and they want more time. And inadvertently, what they end up creating is another full-time job, right? That and then it's like, hey, you wake up one day and you're like, this isn't really what I wanted or what I'm working for. I'm working hard to get there, but I feel like I've been doing that forever and spinning my wheels, and now I'm like more stressed and more busy, right? And there is a time that you have to just buckle down and do that. The suck, you got to grind and do that. But there's also smarter ways to invest and ways that you can participate in real estate. Um, but I love real estate because it can be a side hustle and it can be whatever you want it to be. There's a thousand different ways to invest in real estate. There's a lot of different asset classes. You can do turnkey investing like we do, where we handle the majority of things and it's more passive. You can be active like you did, where you started flipping houses. And we did some of that too. We started with some wholesaling and flipping, not on large scales, but just as a way to create more capital that we then put into rentals. But early on, I mean, I guess I was fortunate. This was pre-kids. We started investing pre-kids, so I definitely have a different perspective now. um, but we just put in the time, what you have to do, right? So I would work a full-time job, and after hours, I was stationed in Grand Forks, North Dakota. That was my first real job because I commissioned immediately after graduating school, and it was a 30-minute drive to the base from town. So I was taking phone calls in the morning and the evening, right, to and from work during my lunch. I wasn't out socializing with people, which got looked down upon sometimes, but I was in my office, like, creating extra opportunity. And then after work, it was a side hustle. We're driving for dollars and doing all the things. So, like, there is a time that you have to put in the work if you're going to be actively doing it. But what I soon found is that I don't necessarily always have to work that hard if I hire in the right people, if I build systems and processes around that, right? And so I came to this realization of best utilization of time, right? And we talk about return on investment, and you can evaluate that concept with anything, return on time. Like, what is the best and optimal use of my time? And it wasn't actually doing a lot of the things. So I started hiring things out. When we were doing bandit signs back in the day, I had college kids go out and weekends put out bandit signs, pick them up. I had brokers sourcing deals for me. I was running marketing ads, and like I started to hire things out and replace myself. And that's true to this day, even with our business. And we do over 1,000 sales annually across 18 different markets. Like, we're doing significant volume, but it's always about replacing yourself and, like, trying to find the right person to bring in. So that's been an epiphany for me of buying my time back, as well as just thinking about money and investing. I don't think there's any such thing as true passive income, because you at least need to be conscious about your money and managing it. But there are ways to, invest where it's more passive, and that's why we like the long-term rentals and building teams around that. So I don't know, it was hard at first, right? But we became smarter over time, I guess.
That makes total sense, and really appreciate your perspective there. And kind of really, during times early on where maybe you doubted the path that you were taking because of the suck and the grind, but you just kept pushing forward. And so I'd really like to talk specifically to that investor out there that is stuck with analysis paralysis. They know what we're telling them, okay, is the path that they should take, right? But they're just stuck. Like, they can't get out of the starting blocks. They've consumed the content. They've gotten educated, right? They know what the risks are, right? But they're just, where do they go next, right?
I think the first thing they need to do is actually take a step back and say, is the path that I'm on the right fit for my time, experience, risk tolerance, and overall goals? A lot of people get the shiny object syndrome watching HGTV or one of these other flipping shows or whatever, right? And they're like, oh, I want to go out and do that. And then they, take on their first flip property by themselves, not having any mentorship. And it's like all of a sudden 2 years go by, they haven't made any progress. They're underwater on the deal. They hate real estate. They think all real estate sucks. Um, my point is take a step back and evaluate, like, am I approaching this the right way based on my goals and truly evaluating it based on that? And if you feel like you are, and another example may be, someone who's a busy professional that likes real estate, but maybe they don't have the time. Like, these are a lot of our investors, right? So they want to buy turnkey where we'll manage the property for them and do most of the things, and they'll still have a good investment. Or maybe their local market's too expensive or doesn't make sense, or they want to diversify outside of that versus trying to fit a round peg in a square hole. And just evaluate that, make sure your goals are aligned with your investing strategy. And then it's like, just stop thinking about it. I literally just stop reading, stop learning, because the actual learning is done by doing. I'm not saying arbitrarily make an investment without any diligence, but it's just like, man, we talk to people all the time and everyone's guilty of this. So I'm not trying to, point fingers at people. Like, everyone gets analysis paralysis. Even to this day, I just like constantly got to remind myself. But I've trained my mind of like, I'm a person who's going to go out and do it, and I'll figure it out on the way, right? And that's sometimes that's bit me in the butt and I lost money on it, but more often it's helped me take action, learn something, and then improve it the next time around. So yeah, make sure your goals align with your strategy, and then just stop talking about it and thinking about it. Like, just go out and do it. Otherwise, you're never going to go anywhere.
I'm Zach Captainstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
Makes total sense to me. And my life is kind of defined by the same thing, right? I make a mess and I clean it up. But the one thing that is common in that is that I constantly fail forward, right? And I learn through the process, right? I've made plenty of mistakes and I learn from those mistakes, and you just kind of learn, what the best path is, going forward. So you've brought up this concept a couple of different times about, the turnkey model, being appealing for busy professionals. How does rent to retirement really simplify, that process? And maybe for those that don't understand what turnkey means, maybe you can kind of unpack that a little bit for us too.
Yeah, I'd be happy to, because I truly think that our business is a unique kind of niche that is not like, we're kind of in turnkey, but also kind of not. So turnkey, first and foremost, is a buzzword. And if you haven't heard of turnkey, and you look it up, you're going to get a long list of things that could be turnkey, because it's kind of a catch-all term. Historically, when we think about turnkey for us in the industry, a common perception is someone living in the Midwest or Southeast that renovates a old house, puts a tenant in, and manages it, mainly single family. So, there is advantages to that strategy as well, but that's not typically our strategy. Now, we still have some of those assets. We still do some renovation on old houses. That way, it's like, hey, you got a new roof, you shouldn't have a lot of capital expenditures. But we're mainly in the build to rent space. But turnkey in general, basically the idea is that everything's done for you, right? It's in a market. There's markets that, like for us, we've identified markets that have positive growth factors, diversity of industries, economic population growth. And we specifically build teams in the areas where we see investment opportunity and where we're personally investing. So you're looking to invest with a team where you're less active in the process. This is more a long-term investment to provide residual income, tax benefits, and those sorts of things. You're not actively investing. And you have the ability to easily diversify out of state. And there's been some businesses that have done very well, and there's also been some, like any industry, some businesses that haven't done well with people, right? And that they usually last, a couple years and then they're gone. So be conscious about who you're working with, no matter what the industry is. For us, though, we really focus on mainly build to rent. These are like A-class assets, or upper B class assets. We love new construction because builder warranties, you have, less maintenance, better quality tenants, better upside because homes appreciate better both in rents and home prices. We focus on growth markets. So a lot of what we do is in the Southeast, markets like Texas, Alabama, Carolinas, Florida, Georgia, and areas that we're seeing a lot of population growing and a huge deficit of housing. But our model is comprehensive. So we have local management teams set up. We don't do management in house, but you do have management that will handle all of your investments and tenant issues, accounting, payments, taxes, should you choose to use them. Where rent to retirement comes in is we really help you build a strategic strategy and roadmap and plan, and we work across multiple markets. So we're not just focused on one or two areas where we're trying to say, hey, everyone's goals has to fit these markets. We really try to take an investor first approach, where we can find areas that fit your goals. But where it becomes really unique for our model is, one, we're builders, Jeremy, but we also partner with the nation's largest builders like D.R. Horton, LGI, Lennar, Toll Brothers, Century, where we get wholesale type of pricing on their properties because as a community, we're purchasing volumes and we pass those forward to the investor. And that's a common misconception about turnkey, or an argument point is that, hey, all the work's been done for you. You don't have any equity, right? You could probably get better returns doing it yourself. Well, our business was really created to contradict both those points, because we actually create opportunities, better buying opportunities because of bulk buying that you absolutely would not get access to on your own. You can buy from D.R. Horton, but you're going to be paying market price. Whereas you could get a 15 to 20% discount coming through our community. Plus, we're going to do all the heavy lifting for you, handle the tenant placement, the management, help you build a tax strategy, a long-term investment plan. And I guess the last piece, just for clarification, where this becomes very advantageous for investors, is that they get to use that equity how they want. It's what we call an incentive. So, for example, if you have a $300,000 house, most of our homes are single family, $200,000 to $300,000, and let's say there's a 10% incentive on that $300,000 house. That means our buyers get an exclusive access to $30,000. That's 10% of equity that they get to use however they want. They could take it as a price reduction. It's true equity because D.R. Horton or whoever is still selling that $300,000 house at $300,000 to the retail buyer. It's appraising for that. Or they get to take that $30,000, they get to take it as cash back at closing. That covers half of their down payment if they're using conventional financing. They get to use it to buy down their rate. We have people buying rates into the threes, or they get to carve it up and use it however they want. And so that really allows them to be a unique investor, to come into immediate equity, to have better cash flow, and then buying opportunities, plus work with our team to build out a strategy. We even have some people that are buying properties with zero money down, because we have credit unions that will offer a 5% down loan on a true investment property. You can buy up to 5 of them. And let's say on that 10%, they get 10% back. That would cover half of their down payment. So I'll stop there because I could go deep onto this, but that's kind of what our company specifically tries to do.
Total sense. And when I talk to investors, and when I kind of think about my own investing journey as well, I've been very blessed and fortunate to have been in a position to do a number of different, I've done hard money lending. I've invested in 40 different investments as a limited partner with a dozen different sponsors, different asset classes. And the one thing that I guess I've learned over my time of investing is it's not necessarily all about the market. Sometimes people will chase after the next, sexy market out there. There's some investors that will chase after, the next, asset class, right? Usually by the time they've chased after that asset class, it's gotten bid up so much that they're actually buying, at or near the peak of the market cycle, right? So I'd like for you to talk to our listeners a little bit more about how your company helps to mitigate against operational risk, because it all comes down to, at the end of the day, it all comes down to the operations, the systems, the scale, the local boots on the ground, right? Like, who's actually going to be responsible, for managing, these properties and these residents that live in these, in these markets, right? At the end of the day, that's the most important thing that I tell people all the time, is it really comes down to that, operational and that, really execution risk of whatever that said business plan is.
Yeah, because you can invest, you can be in the perfect market, right? The best market, but have terrible operators and a terrible team, and then your investment is non-performing, even though you're in the ideal market, right? But I would say that the U.S. is a diverse place, and there's a lot of microeconomic scenarios that need to be considered. a lot of the news that we hear is like on a macro scale, right? And most of it's like concerning because it's, headlines. But the U.S., there's a lot of interesting things happening throughout the country in different places that people are generally unaware of, unless you have some reason to be aware of or local tie to that area. So being conscious about the right location is key. But I will also say that the U.S. is a diverse place, and there's a lot of very exciting markets for different reasons. Finding a market that fits your goals for one reason or another is important, from a price point, from a return perspective, from a tax perspective, from a legal perspective. Like, all these things are important when choosing the right market for you. So just because you hear about an exciting market doesn't mean it's the best fit for you. But our approach has generally been sticking to the fundamentals of real estate. Yes, there are opportunistic markets that we want to be conscious of and participate in. A lot of that is just driven by supply and demand. And that's what I'd encourage people to do, is not overcomplicate things, right? Like economics 101, supply and demand. We have a deficit of 7.5 million households needed in the US. We have an affordability crisis that's worse than it's ever been right now. And so it's like, and there's a population shift. We are still seeing population shifts down to the Southeast. South Carolina was the fastest growing state last year, and that beat out Texas and Florida for the first time. So these are a lot of things to be conscious of. But generally, hey, here's what I tell people: don't overcomplicate it either. If you're trying to buy a portfolio, just at the end of the day, if you buy in a good market with a good team, then that's really what it's about and what we're talking about, right? And there's plenty of different ways to do that. But to answer your question, how we do it, we try to focus on the fundamentals of real estate. We look at, like, just create some bullet point criteria. We try to be under the median house price point in the U.S., which is plus or minus $400,000. And so we know that if we're much further below that, we have a much longer runway for appreciation over time and affordability. We have the largest tenant in home buyer demographic because of affordability issues. So we try to be in that $200,000 to $300,000 range, which you can buy brand new construction, A-class assets in that $200,000 to $300,000 range all day long in the right market. That's a down payment for some people in other markets, but we want to be in areas that have a diversity of industries, not just relying on, say, oil or gas. The local teams, as you mentioned, are extremely important. Some of our build-to-rent operators will have management in-house. Sometimes we have to source a third-party company. We did do management at one point in time, but quickly learned, again, we're better off partnering, finding the right people that already exist, where we can maybe we partner with them and bring in best practices that we've seen across the country, and then help them scale effectively over time. So that's been our approach. But at the end of the day, it's just track record working with someone, especially on the management side, right? Is like, until you have a proven track record with someone, you don't really know how that business partnership's going to go. But focusing on the fundamentals of real estate, being in the right locations, and then navigating, things always come up. This is real estate. You're housing people. Businesses change. You can have a management team that does well for 10 years and then loses their key people, or whatever the case is. So also just being nimble to be able to adapt and pivot when needed. I think all those things are important to have sustainability for us in the markets we operate in.
Totally. And I'm glad that you highlighted the fact that, a good operator really needs to operate with the head on a swivel, right? Because there are headwinds, right? There are black swan events. There are challenges, in the real estate business. I like to say that birds fly, fish swim, and real estate falls apart. It's just kind of what happens. And that's why you're really investing in the operator, as opposed to the asset class or the market location. I also appreciated you highlighting kind of, the media, right? I oftentimes tell my kids, rage against the media. When the media is telling you the sky is falling, that's actually probably the time to get involved as an investor, right? When the media is suggesting that everything is going well and everybody's making a whole bunch of money in a particular asset class, that's probably the time to pause, right? Or the time to sell. So I really appreciate you highlighting that. Zach, again, really appreciate the value that you brought us today. The listening audience, thank you again for jumping into yet another episode of The Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.